Hi, welcome to the Market Alert for Wednesday, the 21st of December 2016. So yesterday, looking at the completed chart, you can see here that this signal shows that it wasn't successful, which is not necessarily true, because if we just switch to the real-time capture of the data and recording of the data, you will see when the market opened, it put in a buy signal, and we had a profitable trade as the market traded up to the scalp. And then I'll just bring this back a bit. Very difficult to do this. Let me just get to this one. There we go. So there you can see the market hitting the scalp, and then we all know what happened. I drew in the all-time high there that was made yesterday, 10 points off the psychological 20,000 area, and the market then just trading sideways all the way through for the remainder of the session. This is late on in the session where we have this buy signal, and there was still a chance to get out there at break even if you wanted to before the close, but as I said yesterday, I wasn't trading in the afternoon. There was no news out yesterday, and the market just stuck in that sideways range, which you can see here. In the daily chart, well, we're still sideways, and we've got the new all-time high there sitting at 10 points away from the major high of 20,000. It's a major psychological high, and it's just a matter of the market hitting this. And once we see the 20,000 hit, then we can expect some fireworks in the new year, or in between Christmas and New Year's. We saw last year after Yellen increased interest rates, but this market is heading for a fall. You only have to look at the volume. There is no volume in this market as it pushes towards that 20,000. It is pure manipulation in this market. News-wise today, crude oil inventories, that's all we've got this afternoon. Tomorrow isn't going to improve, on Friday certainly not, as we head into the Christmas weekend. So again, it's a matter of waiting until we get that out of the way. Monday everything returns back to normal in the US. The UK doesn't, but the US, they don't break much at all. It's there's no such thing as Boxing Day. It's back to the desk come a Monday, Tuesday, and normal week next week for the US. The news items might be slightly different, but certainly trading continues as normal, which is why most people were caught out last year, because between Christmas and New Year in the UK, people don't bother to look, and then the market fell from the 28th, which will be Tuesday next week, I think, if I remember rightly. Sunday's Christmas Day. Yeah. No, it'll be Wednesday. So Monday the 26th, and we'll see what transpires from Monday onwards. It should be quite interesting, actually. And then on the implied volatility, 998, up slightly yesterday, 0.8, probably because the market couldn't make its mind up, but you can see the historic volatility has dropped once again as well. So this setting up for a perfect correction in the market as well. And that's really about it this morning. There's not a lot to get into. The news, well, there's nothing much on that. It's all political stuff at the moment on zero hedge as well, which is a bit boring and predictable. So that's about it really. We're just heading for that 20,000. Watch the market once it gets to that level. It's going to get to that level. I can't see how it cannot get to that level, because that's what they've been aiming for a very, very long time. But once we've reached it, then it's good night Vienna, in my opinion, for a really good correction. Doesn't mean to say it won't go back to that, but certainly once we hit it, we're going to see some selling coming into the market after it's hit this target. It might trade through for a bit, but it isn't going to hold at that level, because there's nothing to aim for. Think about it logically. There's nothing to for the market to hang on to once it's hit that major psychological level. Right, that's it for me for this morning. As ever, thanks for your support and also for watching. See you in the next one.